Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again on euro currency. So it was a really tough week for traders because it was full of the different surprises, mostly negative, especially in relation to United States dollar, and here we have this economical fundamental effect as the psychological emotional effect on the markets, because actually, well, situation has changed drastically just within 1 week, because 2 weeks ago everything was cloudless and people talked about that the United States economy outperforms the rivals, the European economy, and this positive this balance should hold, and everybody have the positive view on the domination of the United States dollar and so on. Traders were happy with rally on the stock market, on the gold market as well, because the stock market was showing really outstanding performance and 22% annual return, so it's really good, and everything was gradually going to the end of the financial year, and then in November the balances should be closed and the final profit should be fixed. But last week it was really dramatic event. So first we've got the really awful numbers on the ISM manufacturing, not only in the United States and the European Union. It also was poor inflation data. The analysis, the forecast for the European Union growth also was downgraded, and that was the first impact on the euro in the beginning of the week. But then the poor ISM manufacturing, ISM services index, and right on Friday, despite the numbers of the payrolls was really positive, that the major indicator was negative, and I'm talking about wage inflation. So it was at 0 point on a month-on-month basis, and it's dropped from the 3.1 to the 2.9% on a year-over-year basis. So all this stuff suggests that in October we could get another rate cut from the Fed, at least based on the Fed Fund futures. Now the probability of that stands approximately 75–80%. What does it mean? It means that on the shorter term context, euro has got a good chance to show the meaningful retracement. What the degree of this retracement will be, it's difficult to say currently. Mostly it will depend on 111 top. If market somehow will break 111 top, it could mean that we will get some greater retracement. If market will stuck inside of this most recent downward swing, it will mean that we will get minor retracement. But taking into consideration the driving factors that we will get and the things that we have in the future, in the nearest future, mostly I mean the Fed statement by the end of the October, well, that promised to be interesting time, and it seems that the deeper retracement is still possible. So in general, all this stuff matches to our major scenario, major context that we have, because our longer term view suggests that the tendency will hold on the market, but it could be interrupted by sudden surprising events, something of that sort, because the driving factors that we've got are not strong enough to change the global tendency, because the disbalance between the United States economy and European economy still holds. But recent events mostly hurts the United States, because European Union situation in the economy already lays on the floor, and some bad news, some worse than expected inflation or something of that sort, it doesn't hurt too much, because everybody already knows that European Central Bank stands as dovish as possible. Quantitative easing program already stands on the horizon, so it can become significantly worse than it stands right now. But in the United States, it's a bit different tune. So we have the relatively positive overall situation, but recent events, recent statistics, it hurts it more, as it changed a probable policy from the Fed, and in general makes a worse background economical background. So it means that, as I said, euro has the chance to show the pullback. So all the stuff we have discussed today in the weekly report and much more interesting information there. So the recent phantom view also exists on the United States economy. Well, what we should keep an eye on from a technical point of view in the current background. First of all, we need to estimate what really retracement we will get. Either it will be short-term small or it will be more significant. Currently, on the price action that we've gotten last week, it's unclear yet because actually market has finished the initial reaction on our support area. So actually we have foreseen that because we've got week ago on the completion of the free drive pattern, and that was the background for taking the long position. And market here has completed the first initial leg, as we said it on Friday. What will be the next? Next, if euro tends to show the deep and larger retracement, market should continue upward action right to this area and complete at least the minimal target of the free driver taken out of this top. If market will stuck inside of this swing and starts flowing here, dropping right back down to the lows, well, that will be negative sign. This will mean that the driving factors that we have currently are not strong enough to trigger any meaningful retracement right now on the euro. So on Friday, as you can see, market has shown inside session to the Thursday. It was not really strong performance. And what's more interesting, that market wasn't able to hit and reach even the confluence resistance. So it has stopped somewhere in the middle between the levels. Here we do not have any meaningful fib level. So that's also a bit curious. But still, it will depend mostly on the further action. If market will continue upward action right from this point, that will be quite another story. And here is why I think that it's possible. So take a look at the 4-hour time frame chart. Mostly speaking on the meaningful retracement, I expect to get the meaningful reversal pattern. It should be rather extended, very well visible on the daily chart, on the 4-hour time frame chart, and it has to have some relation to higher time frames. And one of the patterns that could be formed and that we see, of course, we already have it. This is the free drive. But another pattern that could confirm that, it's of course the hand shoulders pattern. So take a look here. We could get the left shoulder, head, and here will be somewhere in the future the right shoulder. So if this suggestion is correct, market should continue, keep climbing higher with the same manner as it was dropping here. So with the pullbacks, with some retracement, gradual, but it should climb higher and higher without any deep returns, deep drops right back down, well, except maybe the forming of the double bottom and double head here. But this tendency should continue. The same story you could see, it's very clear, on the dollar index. So take a look. That's also the hand shoulders is possible on the dollar index, and it even looks here is better than on the euro currency. So the same powerful line, 12618 extension of the top of the left arm to the head. Very good relationship and overall price action. I will not be surprised if we'll get here some divergence with the MACD as well. So right, so it's very perfect, as you can see. Absolutely good situation here. Another reason why I think that it's possible, so take a look at the 4-hour time frame chart. Here we have the grabbers. I don't have the MACD, I put it on the chart just to keep it clear, but here I just will show you. We have two grabbers here. This has been formed on Friday, which means that market could continue upward action right in the beginning of the week. Despite the spikes that we have discussed on Friday, this has been formed, retracement, but currently this price action starts to remind kind of the bullish dynamic pressure because it doesn't show the deep retracements, fast pullback, the major drop has not started on Friday despite relatively positive numbers, and all this stuff means that really good, big chances that we will not get some meaningful pullback here. So market could start climbing right from this area. Another reason why I think so is because of the dollar index again. So take a look at on the dollar index. The overall price action looks like the flag pattern, flag consolidation. If you will drop your time frame to the hour chart on the dollar index, you will see it more clear. It looks better than on the euro. On the euro, it's more choppy, but here it has more precise shape on the dollar index. On the euro, it looks approximately the same, but as I said, it's not as accurate as on the dollar index. So, despite that we have discussed on Friday has happened, although market unfortunately hasn't still hit the XOP. Drop has happened as well. And take a look, market here keeps very accurately the harmonic swings. So that was the first harmonic, this is the half harmonic, again whole harmonic here as well. So I will not be surprised if market will not show any drop, for example to the 618, but after some consolidation will open with upward continuation. That's really possible. So if somehow we will still get this downward retracement, well, in this case we will just keep an eye on the possible bullish patterns that will be formed. Maybe it will be some catalyst triple to buy, for example, because our initial hand shoulders already is done. So we talked about it in the beginning of the week, and XOP target mostly is completed. So as I said on Friday, the initial swing up is done. Now market should either double this initial swing, which will be this first harmonic, or it could show some deep retracement. But as I said, in the current circumstances, approximately 50-50. Market really could continue climbing to the upside immediately, just because of the patterns that we have, overall negative background for the United States dollar that we have, and some bullish signs such as the grabber here, flag consolidation, shape of the flag on the dollar index, and keeping the harmonic swings that we have here. So that's a bit complex, but this is the reality, how the situation stands in reality on the euro. It's not really very simple to find the correct moments for position taking, but I suggest that if you do not have long position yet, well, you could wait a bit more and see what will happen, because I think that a lot of chance will be, some different patterns will be formed definitely. So maybe indeed market will show the retracement here and we will get the chance to take the triple to buy pattern, something that sort. So if you have longs, well, you could keep them probably. Just don't forget to manage your stops, drive your position, and control the risk. That's all that we have currently. I do not see really good setups for taking short positions. So no significant context on for the bears, no patterns actually, even on the intraday charts. So that's our view on the euro.